Welcome to the Stage Analysis Weekend video, part 1. I'm going to split this video into 2 this weekend again, as that worked quite well last weekend. Makes it a little bit more palatable, breaking it down into the watch list stocks section, and then in the second part I'll go through all of the various indexes, market breadth charts, industry groups, the bell curves, etc. So looking at the weight of evidence approach in the second part. But the first part, this video, we're going to look at the watch list stocks from the weekend scans. So starting off today, we've got Apple. Had that move on Friday, was highlighted earlier in the week, obviously in terms of it had earnings coming up. So big move on Friday, saved the market. We had a huge week this week. It was obviously lots of mega caps were reporting and lots of them were getting destroyed in the after hours. We had big gap down moves in multiple mega cap stocks. Amazon went down quite heavily. Didn't break down below its base structure, managed to hold at the bottom of the base, but lots of strong after hours moves. So it was left up to Apple at the end of the week to save the market, which it did. But whether that actually continues on or whether it was a one-day wonder is another story, but we'll get into that in the second part of the video. So at the moment, Apple still in a little bit of no man's land here, hanging around just underneath the 200-day moving average here. You can see in terms of stages, it was down in stage 4 here, so flipping back up through the breakdown level once more, so potentially could be moving back to stage 1 again. We could still be chopping around in a much more large distributional pattern. It's a little bit unclear with Apple where it's at the moment, but at the moment it needs to continue to push through this 200-day moving average. If we can see a move back above the 200-day moving average and then a subsequent pullback then holds that, then potentially it would be looking for a move up and out back through a little bit of VCP type action, etc. But some really strong volume on Friday, obviously in the world's biggest stock, so managing to hold up the market on its own really. Got CALX, CALX next up. This has been highlighted in the watch list multiple times over the last few months, so I wanted to highlight this again as nice little bit of tight action on Friday, consolidating after a stage 2 continuation breakout on its earnings results earlier in the week. So you can see the volume has tailed off a little bit as the week went on, but the majority of the price action has formed above obviously the earnings bars, gap up day basically. So some strong price action there in the near term, obviously extended from this near term 21-day moving average, so it could potentially start to come back into there. So if it does, we want to see it hold in this kind of range, not particularly come back down below that 21-day moving average or start to undercut the gap up bar day. So ideally with significant bars like this, you don't want it to drop down below half of that range really. You want to see the majority of the price action form in the upper half of the bar and above. So at the moment, looking for this to make a further continuation to new highs again. You've got this huge cup and handle type pattern over the course of the last year, so very, very large pattern, but at the moment there's obviously near-term resistance coming up in the 80 level. BMI, so this one, I'm not sure if I've put this on the watch list before. It's a little bit of more of a minnow. You can see from the volume, it's not got huge amount of volume there, although obviously the price there, so the actual dollar value of that is much higher. So it's not terrible volume. It's just obviously because of the dollar value there compared to the actual volume. So again, a little bit of a cup and handle type pattern on this one, a little bit of double bottom action there, spring type move. Up and out, followed back through with a sign of strength bar to new highs here, so and consolidating. So Friday's move, tight little action there on lower volume, sitting around the close of that significant bar. So I think the actual earnings on this one I looked up, I think it was actually down here and then it followed through. So showing some decent strength moving out into stage 2. If we look at it on a weekly chart here, you can see the stage 2 breakout. We've actually got a much larger pattern going on there, a bit of an inverse head and shoulders pattern. So testing the top of the original range there, so into a resistance zone at the moment, so could need to pull back in a little bit and tighten up. So if it does pull back in, you obviously don't want to see it undercut the breakout move that it's just had here, so you'd want to see any kind of backup move hold within this range, start to tighten up. potentially for a continuation breakout to new highs. If you see it start to roll back over in here and it starts to come back below, then obviously that would be a sign of weakness. Failed breakout attempt could turn into an up thrust. So, but at the moment, obviously looking for that one to either make a continuation or continue to tighten up some more. ENPH, obviously been in the watch list multiple times over the last few months or so, since before the stage 2 breakout was highlighted loads of times throughout the stage 1 base structure in here, and then on the breakout move and in the continuation. So it came back in, talked about using the intraday, the stage 4 on the intraday move into here and back into the original bar. So it started to move back round again. We got back above the 50-day moving average. So I highlighted this. It was in the watch list on these days and earlier in the week, so highlighted multiple times this week already. So, but one of the strongest stocks in the market still, 99.7 SCTR score, and the group, obviously the renewable energy equipment group, has moved back into the number 1 spot. So this is a potential leading stock in the group other than FSLR. So at the moment, looking for this to hold above this 50-day moving average in here, not see it pull back below that again. So if we do get a pullback move, you can see it hold above the 50 there, start to potentially tighten up and move back up and out. It could get a little bit of a mini head and shoulders if it does that kind of thing. But obviously it starts to roll over here and it can't break and starts to pull back below that 50-day moving average, then that would be a sign of weakness there. So let's see on watch. FSLR, which we just talked about. So this has had a really strong stage 2 breakout move and run up, held above that 21-day moving average for a long time there before starting to top out in the near term and coming back into this 50. So recaptured the 50. We got a earnings move. I think earnings was Thursday night after the close. So Friday chopped around, moved lower initially, but then chopped around during the day, closed slightly up on the day. So a little bit of a volatile day on heavier volume, which is not ideal, but did close up nonetheless and above that 50-day moving average and the 21-day, although they're slightly in the wrong order at the moment. You need to see that 21-day start to move back above again. Again, could be good to see this continue to tighten up in this kind of zone. If we can get that, again, a little bit of a mini head and shoulders type look to if it did, and then be looking for a continuation breakout to new highs. Look at on the weekly chart. You can see that much broader pattern that's been forming for a while now. So at the moment, major backup in stage 2 at the moment, broke out into stage 2 back around this kind of area here. So it's had a really decent stage 2 run, one of the best runs in the market since obviously the July low. There's been obviously lots of decent percentage moves, but in terms of the smoothness of the move, you're not just looking for percentage gains. You actually want stocks that are obviously move in the right ways. So if this doesn't fall over here, we've obviously had a little near-term double top. If it can manage to pull back in, start to consolidate in this kind of area here, we'll then be looking for a continuation breakout to new highs. ON, so this one's got earnings before the market open on the 31st, so tomorrow. So this one's up straight away on Monday. So you can see a little bit of a downtrend channel in the near term since the August high there, since the market has been pulling back. That spring type action through here, which has started to pull back up again at the 200-day moving average. So it's undercut that 200-day and come back in again. A little bit of a significant bar in there as it reversed back through. So looking for a breakout move up and out through this downtrend channel, through the old resistance levels in here. If we look at this on the weekly, you can see that would then push it up and out into a new stage 2 uptrend if it did break out through that. So we'd be looking for, by the end of the week, more than 2 times the average weekly volume if that was the case. If it can't break out, we get if the earnings are poorly received, it starts to pull back in, starts to come back into the range, and you start to lose that 200-day moving average especially, then that would be obviously a major sign of weakness.